a lot you can do. I mean, you can kind of manipulate if you have the stock, make sure that every 2 months you buy a lot of stock, that you have a lot of that you can claim back. But you can obviously only do it to a point where you have, it makes sense to have that amount of stock on hand. And you need to keep doing that, otherwise it doesn't make sense. Very simple. It's VAT invoices that you raise to clients and VATable, allowable deductions that you can make. But like you mentioned, the biggest thing with that is more the management of the VAT payable to SaaS than the actual doing anything else with that, because you just need to make sure, if you're a consulting business or anything that you sell, that you can actually charge the VAT on top of the invoice. Always try to add the VAT on top of the invoice. So if you charge somebody R1,000 for a consultation, you charge them R1,000 plus VAT. And then obviously the VAT that you already pay on the expenses, you can still deduct, and then you just pay the difference over the source. To open up a call account and just transfer that VAT, keep that just aside. And then VAT is more a management thing than it's really something a savings thing. If you manage it correctly, you still get. I mean, if you charge correctly on your invoice and you keep the VAT aside, then the rest, all the deductions, is really just a saving of the VAT. It's really just an advantage to you. I had a lot of clients that would do that quite religiously, keep the VAT aside, and then at the end of the year they pay their holidays with that, or they put it in their bonds. The better option, put it in the bonds, and obviously they build up some savings because they've been doing that. And you want to use it for a new project, and you start using the VAT, the funds for a new project, forgetting that you need to pay over the VAT.